Hi everyone, how's it going? I hope you guys are having a good Friday. And I thought I would put out the recap today so you guys could have the long weekend to maybe study it. And I'm really excited to talk about this month because I made some mistakes and I definitely learned from my lessons, which I think that maybe you guys can also learn from it if you guys are faced with the same trouble that I did and be able to handle it better if you've already heard it from somebody else and be able to manage it better, which is something that I already knew, but I guess I just was undisciplined enough to have to go through it. But that's okay because that is also part of it and I'm not happy it happened, but definitely something that I will be talking about and I will explain exactly what happened. So let's get into the recap. So the month was not like the other months I have previously talked about, and I haven't been doing them long enough to show that everything will not always be as hot as it is. My stats definitely changed this month, which I will talk about also. And I would like to note the environment that has been shown by other traders out there. They're just by looking on Twitter, by looking at all of the posts and all of what other traders are saying, this month is different than the other. There were some traders that would talk about A plus opportunities right at market open and all throughout midday and all throughout the afternoon. Now we are back to midday, has less volume. It's a little bit more of an avoid on most of the trades that are coming up, which is not something that we have seen. That's not something I'm even used to. Some OTC traders also like myself have been noticed that the hype is not there. There's not a lot of follow through. There's been a lot of runners that maybe just trickle off into oblivion. They don't have much follow through and that's also difficult for the framework if there's not a lot of follow through. There's not a lot of breakouts, and there's not a lot of panic dip buys to look into for former runners. There's not a lot of first red days. So that is what I trade mostly, and that wasn't seen a lot. There were a lot of opportunities, but maybe not some that I was known, which is okay because February was absolutely amazing, and a break is also just very needed. So I'm still always looking at trades. Yeah, I'm always most likely behind the screen, but I'm avoiding many of the trades that I would have taken before because some of them are just not working out, and that's okay. But it definitely, like, the shift definitely was a little bit different for me because I, it just like weirded me out. Why is February just like insane? And then we come into March and it's like, completely different in my eyes. Maybe not in some of your eyes, but in my eyes, it was completely different. So I was like, wow, well, it can really change like in a day because March started and everything just kind of changed. And that was when I acknowledged that the importance to protect and not give money away because the market will always be there to take your money and you just don't want to donate it for free. Why do you have to if you've earned it with hard work? So it just needs to stay, and that's where risk management comes in. And also, another thing to take note of is like your outside life. How is it going? If you don't need to trade, the market will always be there, and recognize when it's time to size up. Know when the right time is. There's a right time for everything, and there's always the right time to focus the most in trading, but there's also a time that the market allows you to give you a break and also focus in on other things. And that's something that I've been working on, working on being able to shift because my whole life of February and January and December was just trading, and now I feel like that's what I have to do, just being behind the screens, but that's not something that I have to do, which is the beauty of this job. You can just do what you feel is right for your schedule, but it's only up to us to recognize when that time is. It's even if it takes longer than usual to shift right away, but just being able to recognize what's going on, just by reading other people's posts, by thinking of looking through your stats, looking through your trades. If I look at my trades, I don't have many panic dip buys, and that is my favorite. But this month, they just were not there. They weren't the best. It was just harder to trade them because there were a lot of fake outs, and that's just mainly what I was trading in February. So coming into this month, the first 2 weeks they were great. They felt a lot better than the last 2 weeks. I will explain why. And just being okay with taking the singles that the market presents. Just, I guess, the first like week or so, I wasn't really used to that, so I gave a lot of gains back, which was my mistake. But just being in the trade and taking your single and then reevaluating later to see if it holds up, if it's going to have any follow through, because I was in a lot of trades that I just didn't take the gain, and now I look back and I think 5 months or 4 months ago, 4 months ago, Mariana would take the gain. Why wasn't I taking the gain? But that was because I was spoiled from February. I was taught that I could hold a little bit longer, but 4 months, Mariana would have taken the gain and ran. So that is what I started to adjust, and I started taking some singles and just not overstaying my welcome. So now we can go into some of my stats for this month. This month it was for 92,000, and here we'll go into my percentage profitability. So it's 72%, just like the last few months. Try my best to cut the losers. So now something that was different was the number of trades I took. It was 123 trades. In the last few months, it was well above 200 trades. So I guess something to note is there were many things that I chose not to trade, unlike I would any other months, because the volume and the patterns here, they just were not the ones to have much follow through, like I already talked about. So some just tended to fade off. So I wasn't trading most of them into the midday or afternoon like I would before. So I chose to avoid as many trades as I could and only take the ones that I knew I was comfortable with. So another difference was my average losing trade here. So my average losing trade for all of my months have always been significantly smaller than my average gain. So here's my average winning trade. So this month I took, it just came from undisciplined trades and a big loss that I took on the last week of this month, which I will explain later. But I'm just not used to it being like that, and that was because I took bigger losses. I was overstaying my welcome. I was being undisciplined, taking trades and setups that I just wasn't used to because I was trying to take a single, but instead of like taking the single, I would just emotionally trade the ticker, And the last one I will note is the profit factor, 2.39. This mostly came from the large loss of 38,000, and now my biggest losing trade, which you can see here. And I can get into what happened to that trade right now. I think that's what I want to focus on. This recap is talking about what I did, how I handled it, and what I could have done better with that, because I think it was the trade that kind of taught me the most this month. Other than that, it's just been a lot of singles and taking losses, but it was mostly on the one that I will talk about. So, okay, so here I'll highlight this was the trade. And and then here is the chart for it, which I will explain. So it was on IMMP, and IMMP is a NASDAQ. You may be wondering, why am I trading a NASDAQ with big size? Good question. I'm not sure. But again, coming from boredom of the OTC market, and this was around like the last week, so this was kind of like the weeks that they were like the most slowest. So I was like, okay, what if I just trade a NASDAQ and just try it for a single? That's what I did. So here, this is the 15-day, 15-minute, and this was on Thursday the 25th, and it was low. So I was a little bummed that I was not taking time off and I was still at the computer. I was not making much, so I tried to venture off that day, and I had very little to look at. So I saw IMMP, which was, I thought it could be like a short into the pre-market highs or something like that for a short. And I was also looking for a single, like I mentioned. So I started shorting around like 370, and obviously it decided to go higher, so I kept cutting and cutting and cutting, and I was already just so emotional. I was starting to take losses, and I was like, okay, well, what happens if I just try and long? Because over here it just looked like it was holding. So I was like, okay, maybe I can just try and go long, and it could squeeze, but the market wasn't even strong. So I really just didn't need to take a trade, but I did, and I forced it. So in reality, I never even trade NASDAQ, so I don't even know how to behave. So around 4, I started to go long because I thought it could bust through the pre-market highs, which that is not what it did. It just had a huge stuff. So I was in big size long from 4, and I was thinking, okay, so if I just sell at 420, then yeah, maybe I can just make back everything that I did and maybe even come out with this profit. But what happens? It just stuffs like 40 cents. So I was stuck, and I sold right away, and then I tried to go short, but it bounced on me, and I just kept buying the highs, selling the lows, and shorting the lows and selling the highs. And that's just what I kept doing. I was still in all of this consolidation all throughout. So it just got super messy. And all I was trying to do was to get a single. And then all of a sudden, I was using too many shares. I was just revenge trading it. And every tick was just too much that I wouldn't even have used if I was just trying to get used to a new setup. And I think the thing that I did wrong the most was keep trading it just because I wanted to make some money back instead of just walking away and realizing that I was wrong. I should have just taken the loss. It was maybe 4 or 5K, but instead it turned into 40 because I was just in it for way too long, and I gave up, obviously when it was at the lows because I just couldn't see that number. It just made everything more emotional just by being there. So the only reason why I was still there was because there was nothing else to trade. And I also had a very good trade on GME, which I took for like very little. So it just made me even more angry that I was so right on GME and so wrong on IMPP that I just wanted to trade something that was right. But instead, I just kept taking unideal trades that just made 0 sense. I wasn't in an ideal time, and I wasn't even in the right emotional place of my life because I was moving houses at the time also, and that was one of the first days that I was actually starting to move. So, it figures because it was just a snowball effect of me trading something that I'm not used to, taking huge size, not knowing how it behaves, staying at the computer, keep revenge trading it, trading something non ideal, and moving. Outside life was out of whack, so my trading was out of whack, and I should have recognized it sooner because it was up to me to recognize it, not up to anyone to recognize it. So at the end of the day, it is me trading the setups that I am used to, or else just getting out and not even trying. There were a lot of people that took this day off and Friday. Why? Because it was slow. There was nothing there. So why did I think that I could do this if I should have just, taken the small loss and not revenge traded, which is something that Tim Sykes always says, just put yourself in timeout. And that is something that I failed to do. But next time I'm doing this, I will time out. I won't be using bigger size. I won't emotionally trade while I'm going through a tough time in my life. And that's okay because this is one of the first trades that I have felt so out of control. And that just taught me a lot. It taught me as a person that I need to be able to control the situation better instead of just keep fighting it, because you don't want to keep fighting something that is just not worth it. And then what I did on the days after was, this was on a Thursday, so Friday I took off, and because that was moving day, and Monday I just took really small gains, and now I am trying to build my confidence back from this loss. It was my first one, so yeah, it sucked. But now I'm just trying to take the singles on what I know. And if I want to ever try something new again, just know that it's smaller size. And now I can talk about a good trade I took, which was pretty stressless, and I think it was pretty much the most stressless trade that I took this month, which was on LKNCY. And this went bankrupt a while back. It's Luckin Coffee from China, like the Starbucks. So this one started trading on the OTC, so we were starting trading it. Like, as you can see, I was trading it on this day, on this day. So I am already used to trading this ticker, and this day it gapped up, and it has a history of holding the gaps and continuing higher. So I started watching it, and I went long for the breakout on this day, on this Friday, and then I was looking for the potential gap and run onto the next day, which is exactly what it did. So this was one of the ones that actually held, and it held really well here. So I was looking for it to break out into Monday, which is exactly what it did. And it has shown in the past that this is what it does. So that's exactly what I was looking for. And I thought it had pretty good risk to reward. And on that Monday, I sold at around 11:25 or so, or 11:15 actually. So Monday I just closed it, and I didn't want to hold for long because this market has shown me that it's better to take the singles and reevaluate it later on. So it's the first green days that hold, and then they break out again. Those are the ones that I'm looking for. It's the normal framework that Tim Sykes teaches, and this is another one of the patterns that has been working well around the past few days. So if we look at Humble, which is TSNP from before. If you guys know about that, TSNP went into TSNPD and now is now Humble. You see the first green day here, first green day here, first green day here. That's one example. ICBU the other day was one example. Right here, another first green day. So you're just looking for ones that are testing previous support down big on the daily and just going for the breakout for the first green day, I mean. ENZC was another one on this day, and I'm looking for that also as well now because it is also down big on daily, and I'm just looking for that first bounce that it gives. OZSC on Friday, and that's exactly what I'm looking for on ENZC because these two bounce the same day together. So now I'm thinking that ENCC will follow on Monday, which is what I will be looking for, and that is what OZSC did. So those were a few examples that you guys can look back on the reversal patterns, since a lot are at the low, so they have been working for me, and I will keep looking into those in the future. Other than that, I have nothing more to talk about. Well, I mean, I could always talk about more, but I think that was about enough that I had to say. Just protect, recognize, and take the singles. Only size into what you know and not try new things with size just because of boredom. No need. Learn your lessons and you can always do better. It's okay to have a mistake, but it's not okay to keep doing it. You have to learn from it, and that is something that I will look into for next time. But thank you guys, and I hope you guys enjoyed the rest of your weekend.